Assalamu alaikum everyone. This is Yahya. We are presenting today basics of stocks trading. This is also a fundraiser for our NUSTIAN fundraiser. Uh, so first of all, I would like to acknowledge that it's been a pleasure that you guys gave me a chance to present, even though I've been only trading for 2 years only. But I would like to tell you guys what my knowledge is basically, and I'm not an expert on anything. It's just my experiences, what I think might be useful for you guys. Uh, there is also risk involved as well. Uh, so just make sure that you are wise on your decisions. Make sure you have like gather as much knowledge as you guys can before hitting the buy button. Um, do your own diligence and trade very cautiously. I also use certain resources which I have written down here, uh, just for just so you guys know if you want some more details. I use the book How to Swing Trade, a beginner's guide. I use the Kindle version. So let's see. So we will keep all the question answers for the end. So I will just go through all the slides. Just let me know when if you need any break. I think question answers at the end should be fine. All right, so let's start with trade types. So if you are in the market, you can either day trade, which is basically you are buying during a day and selling within that day. And swing trading is if you are buying in a day and selling after that day before the year ends. So it will be classified as swing trading. And long-term investors is basically if you hold the stock for more than a year. So swing trading and day trading tax implications are same. Long-term is slightly different than swing and day trading, which we have discussed somewhat in our groups as well. The other type is basically position trading, which are like huge investor traders, which they do. They buy a certain stocks with a huge within a certain number of time, like 5 to 6 months or to a year. Like Warren Buffett, he buys certain stocks in big blocks at specific prices and support levels. Then we have retail investors, which are like us, or day traders or investors who are working from home. And institutional traders are basically a group of people managing basically the whole portfolio. Institutional traders basically buy stocks which are above $5 and $10. So $5 and $10 resistance are basically pretty big resistance. If any stock break that resistance, it's basically uh, attracts more money from institutional traders. So even though day trading and swing trading, $5 and $10 resistance are pretty big deals. So there is another type of trading called high frequency trades, which requires algorithms. Institutional traders also, some institutional traders also work on algo trading. They have relatively low impact because they sell with very few profit margins. So for swing trading and day trading, it doesn't have that much impact on the price levels. As far as types are concerned, you can either go long or short. Either you think price will go up, or either you think price will go down with a period of time. So I will go through the basic trading terminologies that we use during in our WhatsApp group, or basic terminologies that you will come into that you will see while reading about anything day trading or swing trading. So I will just go through briefly on each of them. First one is bid and ask. Bid is basically the price level which somebody is trying to buy, and ask is basically price level at that point in time somebody's trying to somebody is selling. Like these are all the orders, buy order and sell orders, and this is the price currently trading for that stock. Spread is basically the difference between bid and ask. Sometimes when the stock is considered more volatile, there will be a heavy difference between bid and ask. So this is called spread. If spread is very high, it is very risky. Spread is mostly high when there is less volume as well. So you guys just know what are the terminologies means. Level 2 is basically called tape. Sorry, level 2 is basically tape. It just tells us in more detail at what current prices we have different orders at of all the buy orders and all the sell orders. And this is called price ladder. This just tells in detail. It's slightly different from level 2. It just tells in detail in a form of ladder what are the selling prices and buying prices. If you are using a Meditrade or Webull client, you can also click on these levels to buy and sell your securities. That's what I do when I do day trade. I just click here, it buys, and then when price goes up, you click here and it sells instantaneously. Another thing is float. Float is basically number of shares available in the market for any stock. So outstanding shares of any company is number of shares the company has out in the market. Some of them shares are purchased by institutional or investors. Minus that, all the available shares that are available, it will be float. So float will be basically at any day number of shares available for trading. So higher the float, it will be more number of shares, and if float is lower, it will be very less number of shares. So stocks are basically classified as micro float if the float is less than 10 million, as a mid float it's 10 to 50 million, and it's called macro float if it's bigger than 60 or 100 million. So float is very important in day trading. Lower the float, the higher the volatility is. So it's a concept of buy and supply and demand. If you have less supply and you have more demand, then your price is going to fluctuate more either way. Stock split is basically sometimes companies split their stocks. Like if the company has a 20 million float and 20 million stocks outstanding stocks, and they reduce the float by 1 second. So 20 million shares will become 10 million shares and the price will become double. So why they do that? Sometimes there is a Nasdaq requirement that every company who wants to be listed in Nasdaq, they have to have price of $1 and they have to maintain the price for 90 days. So if price is less than $1 and it's less than $1 for a certain number of time, they have to increase the price of the stock just to be listed. So split size basically depends on how low is the slot as that stock at that time. If it's like 50 cents, they will do 1/3 float, so price becomes 1.5, something like that. So volume is basically number of shares trading at that time during the day of any stock, and relative volume is basically volume compared to average volume throughout the day. So every stock has a average volume that it trades every day, and sometimes you get a higher volume than than average volume, then you have higher relative volume. So relative volume is very important factor in swing and day trading. Other terminology we used are price targets. Basically, price target is where you are targeting your stock to reach so you can sell there. And so we normally write PT in our chats as well. So that's why I'm going through all the terminology so you have a better idea. Even if you read some of the articles online, they write terminologies like these, so you understand what they mean. So price target is basically target at which you are trying to sell, or your target is where you want to sell your security. After hours is basically uh, after 4 p.m. Central Time to 8 p.m. It will be after hour. Pre-market is 4 a.m. to 8:30 Central Time. Thus we just call it PM. Pattern day trader is basically any person who is trading uh, 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 day trading more than 3 times per week or in 5 days. Most of the broker, if you're PDD, most of broker requirements are you have to have $25,000 more in your account. There are certain brokers like Lightspeed who does not require to have 25,000, but they have commissions instead. So other terms are bullish or bull or bullish means price gonna go up. That's speculation. If you have bull on something, you are going up. Bear or bearish is you are going down. Shares buyback is sometimes company announce that they are buybacking their shares to give it to their employees. So they remove certain shares from the float and uh, buy back at market price. Share buybacks have like positive impact normally on the stock. The company wants to buy their own shares and they think that price will go up, so they are buying their own shares. Initial public offering is when company is listing initially in any of the uh, trade exchange. Secondary offering is when they are trying to raise money. Normally happens after a good uh, press release. They do offering, which I will explain later. Lagging leading indicators. There are certain indicators like RSI, MACD. They're all lagging indicator because they change after the price change. And the leading indicators, there are some indicators that predict where the price will go. Divergence is basically if price action is going against the indicators. So if indicator is going down, price is going up, there is a divergence, or vice versa. Market cap is any market cap is the price without multiplied by outstanding shares. So it will be market cap of that stock. So market cap is also classified as micro cap, like less than 10 million. 10 to 100 million is mid cap, and 100 million plus is macro cap. Earning per share, we call it as EPS. It's how much a company is earning and to have a total number of shares. Support resistance level, we will explain in detail later, but support is basically where you have support of where you have more buying pressure, and resistance is where you have more selling pressure. So you just think of it and visualize it as a pressure because once you reach at that point, you will think there will be a push on either direction, so you can trade better. OTC market is basically over-the-counter market. They are basically companies who they are mega caps as well, big caps as well in OTC market, but they don't file or fulfill the requirement of normal exchange. So they are in OTC market, like Lurking Coffee. They're gonna be in OTC market because they lack the requirement to be in the brokerage system. Average down and up is basically when you buy at a lower price, and when you have a stock at $10, and if you buy at $5 at the same amount, your average will be 7.5, so you're averaging down. Sometimes when you think the stock will go further up, you buy above your average price, so you normally average up. So short side is basically, these are all the terminologies that associate with the stocks and shorting of the stocks. So borrowing is basically you borrow the stocks from broker and at a higher price, and you sell it later at a lower price and you keep the difference. Covering is basically when stocks buy again to cover the whatever they borrowed the stocks. So when they cover or they buy, that's called covering. It's also called a short squeeze when a huge number of short sellers buy at lower price. You have increase in price. Days to cover is basically number of days a short has to cover or buy back the shares again. So short interest is also one of the good parameter that you need to see during day trading or swing trading, how much short interest we have in that company. Like if you have more than 20% of short interest in any company, it means more than 20% people think that the company doesn't belong to that price level. We have halts and circuit breaker halts. Halts are basically when you have a certain change in the price action. It is a requirement of the stock exchange to halt that stock. Like if you have more than 10% increase during 1 minute, you will see a stock halt. Just like we experienced 2 months before when the market down crashed 10%. Though it was a requirement that it has to hold for 15 minutes. So trading halts, you can get advantage of halts going up and going down. And it's also a good strategy to earn some money. So these are the terminology. There are a lot more, but these are the ones that we use a lot. So I just wanted to go through it. For opening an account, you have two types of accounts, checking account. There are certain things that I have in my slides which are also covered by Dr. Rashid, but I just want to go through it again because some of the participants are new here as well, and they are newly starting into stock market. So account is a checking account in which you only trade with cash. There is no leverage. You just use whatever cash you have. If you make a trade, you have to wait 2 days to make it settle, and then you can use it again. There's no PDT rule applied to it. Once you are trading with settled cash, you can do as many trades as you want. But you cannot short or you cannot borrow money in your checking account. Margin account is basically a lot of brokers do have a minimum requirement that like trade trade $2,000. Webull has certain amount. You have to see which broker you are in. What's the minimum deposit requirement for margin account? Margin account main advantage is basically leverage. You can borrow money in your margin account. Certain brokerage have limit, $5 limit that you can borrow money for stocks which are above $5, because if you have a stock less than $5, they're considered more volatile, and you can lose a lot more money if you have in margin with stocks less than $5. So there's also interest charge, which is very minimum for most of the brokers, but there's interest charge if you keep the borrowed money overnight. If you do a day trade with margin, then you are fine. Long shorts are different margin. You can do shorts as well in margin. And if you have to be careful if you borrow money during day trade and you have other stocks also in that account, and if the price value of that stock goes down, then your broker can sell your shares without letting you know. Because if you borrow $2,000 and another stock you lost $2,000, then they can sell that stock for you to cover their borrowed money. They have to protect their borrowed money. So you have to be careful on margin account. It's advantages because you can leverage, but you can leverage your profit and you can leverage your losses as well. So there are certain platforms. I just wanted to point out some features to look at for anybody who is looking for a new broker. Uh, so these are the features. So responsiveness of trading is very important in day trading, not in swing trading. Swing trading, you can have an order and it can get filled. But if you have less responsive during day trading, then you can lose a lot of money just because you didn't get the on the right time. Reliability is basically if your brokers goes down on and off. I have seen all the brokers in the last 3 months. They were down during some days. Webull was down, Ameritrade was down, Robinhood had 2 to 3 day crash. So you suffer in during those days if your brokerage is not reliable. Interface, you have to try different brokers. Either you want to do it trading in your computer or your cell phone. There are very many different options. They all of them have different analysis tools. Uh, Secured, some of them has your money up to $215,000 insured. Some of them doesn't. Some of them has education option, like Ameritrade has an education section separately, which you can use. Some of them has scanning tools, and alerts is also one of the good features that you should have in your brokerage account. Basically, alerts, once you start doing technical analysis and you point out that this is the support line, and then you can set an alert that if price goes here, you get an alert and you can get in, stuff like that. So alerts is very important in swing trading, not in day trading. So these are alerts should have broker account should have alerts. I think that's very important. On the right, Webull is, I think, the best mobile platform. You have a lot of analysis tools. You don't have education, but you have scanning alerts. Interface is pretty good. Responsiveness is not that great, so I use Webull for just swing trading, not for day trading, and I just use TD Ameritrade for day trading. The client is pretty responsive. Go to the next slide. So after the brokerage, these are the tools that you can use. So these are the tools you can use on top of your brokerage account. Finviz is a free website. This is the top right picture I have put. This is Finviz. It gives you an overall market picture. It has very good virtualization or charts. You can have a broader view of your market. If you go on the website, the main page, it will tell you a lot of information, what's happening during the day, which ones are the top gainers, which ones are the top losers, and much more data, but it's all free. The only downside of the Finviz is it doesn't have pre-market data, but that's fine if you are not doing day trading, then you have other options as well. Chartmill is a good tool to have develop charts along with indicators. Stock charts is also a charting tool. Estimize and Earning Whisper, basically they do financial estimates, event calendar, like they will tell you when the PR is coming, stuff like that. For biotech, there is another one that tells you FDA event calendar, if you want to look at that. But otherwise, Earning Whisper and Stock Estimize is pretty good tool. Stock to it, it's just Twitter for stocks. I have a lot of people that I follow. I get a lot of notifications during the day, and it helped me in sorting out what's happening in the market and what general traders are thinking, in which direction they are thinking, stuff like that. For news, you have CNBC, Yahoo. Benzinga is a paid software, but Benzinga will tell you any news much sooner than CNBC. Most of the day traders I follow, they use Benzinga. It's, I think it's $150 per month. It's expensive, but if you get an early in any news, you pretty much make 150 in one trade. So these are the tools that I don't use all of them, but I should start using some of them. I use StockTwits. I use Webull News, but Webull news comes pretty late. Like price usually is higher when news comes. Uh, I use Finway sometimes, but mostly I use uh, Webull scanner that tells me pre-market and aftermarket stocks that are going up and down. After the tools, these are the instruments that you can trade in. The first one is ETF. ETF is basically low expense trade fund that is comprised of different stocks underneath it. Like you have technology ETFs, you have health sector ETF, you have ETFs that track indexes, that tracks bond values, currencies, commodities, volatility. We also have upcoming ETFs that also reflect cryptocurrencies. There are certain direction ETFs that moves 3 times as fast as their normal counterparts. Like you have natural gas ETF, it moves 3 times as 3 times exponentially more than their normal ETFs. The beta funds are basically are derivatives of options and futures. So if you have more option traffic, your beta funds moves up and down, stuff like that. And basically, you can also track market volatility, like TVIX. It's an ETF, but it's move up and down based on market volatility. So ETF, you can do sector trade. Like if you think that next 3 months technology sector is gonna do better, you can buy ETF trades, take technology trades. And there are like different sector: oil and gas, shipping, um, health sector. There are like too many to think of. Next instrument you have is stock, individual stock. That's like Amazon, Apple. Instead of technology, you just buy Amazon, Apple. The only downside is it's slightly more riskier because one event can change your profit and loss ratios. So ETFs are much more stable, but you have less risk and less reward. In stock, you have more risk and more reward. You can trade options. Basically, option is call is basically if you think the price will go up. Put is basically when you think price will go down. So you just say price will go down at this time in the future at this price. So that's what you bet on. If the price starts moving that direction, your stock option price starts going up. But I don't do options. It's very high risk, high reward. If you do it right, you can earn a lot of money in options. Cryptocurrency and currency is basically forex. You can also trade forex. In forex, you are not limited for 8 to 4. It's basically 24/7. You have higher leverage. You can, if you have a forex account, you can, if you have $1, you can trade up to $100. So you can have high leverage, so you have very high risk, high reward. Cryptocurrency, you can trade cryptocurrencies, Bitcoin, Ethereum, and Ripple. There are a lot more than that. But there are all the instruments that you can trade. You can trade stocks, you can trade ETF, you can trade crypto, options. So it just have to find what you are looking for. Yeah, ETF is very stable, stocks are less stable. Option cryptocurrency is basically hard to say, but they are very volatile as well. Option is the very aggressive option, like so the aggressive of all the options you can do trade. So next thing is how you manage your account and your risk. So so before we buy anything, we analyze what should be our entry point. It doesn't matter if you are doing uh, day trade or swing trade. If it can apply for both of the strategies. So if you enter at a price point and you establish your stop losses down somewhere, you point out your support and resistances. You have to find out how much you are risking against how much you can earn. So before going into any trade, you have to visualize that. At least if you don't write in the paper, make sure you have 1 to 2 ratio, 1 ratio of loss to 2 ratio of profit. Any trade you make, there's chance that it go down, there's chance it can go up. So there's nobody on this earth who can tell you 100% of the time that who can predict the movement. So technical analysis, news, they can suggest something, you can make up your mind, but at the end of the day, you have to have a risk. Even the most successful trader I've seen, their winning percentage is 80%. So 20% of the time they lose. But if they don't uh, have a plan, they can lose everything during those 20% of losses. So you have to manage your losses by minimum 1 to 2 rule. Normally, when I give any uh, suggestion in stock groups, I try to have it 1 ratio 5 or more. So I'm not saying I'm right most of the time, but if you find trades that are 1 ratio 5, even if you are wrong 20%, if you are right 20% of the time, you are still at break even. So that's how I think. So setting stop is very important during day trade. Um, you can think that the price will go up eventually, but if you enter at the wrong time, you have to exit and to secure your portfolio. So before buying, just make sure you have an exit strategy. Exit strategy is basically way to sell even if it go down or go up. So you have to have a number for both of those exits. So you have at peace. Don't This thing I do a lot. I emotionally attach myself with any stock, just like GNUS. I would like nothing can stop it, but I was emotionally attached to it, and I I did not take a huge loss on it. Ended up making some money, but it was a wrong decision that you emotionally attached to any stock. Even if you like Tesla, you like Apple, uh, just think of it as uh, at the end of the day, you are here to make money, not to just invest in it. Everybody who is investing money in stock market is there to make money. They don't care what Apple makes, they don't care what Tesla makes. So at the end of the day, it all matters at how much you are making. So that's the hardest thing that we have to learn, not to just think of any stock that you are going to invest in, think of it critically. Trading size, there are like a lot of different rules for trading size. You can have your own percentage, but this is the general rule, 2% loss rule. If you have a $20,000 account, any trade you cannot have more than $400 loss. So why is this important? Like I've seen certain trades, I was negative. Uh, Once I was in a trade for $18,000, and I did not have the exit strategy. I was very new, so I ended up losing $8,000. And at $8,000, I said, okay, I cannot take it anymore. I had to exit. But if I had my exit strategy, I would have taken loss maybe $400, $500, and I was out. Even though price goes up, there's a FOMO effect, that fear of missing out, that oh, I sold early. But you have to think that you entered at the wrong time as well. So take your losses at your overhead charges. Like any business you start, your trading is also a business. So all the losses you are having is take it as an overhead expense to your main trading business. So that's how you should trade. So your trading loss size can be different. Yeah, just make your plan that you have this much amount of money, excuse me, to trade in, and this is your maximum allowable loss per trade. And once you establish that, then it will be very easy to strategize your trade. And if you have a $400 losing strategy, like you have to calculate beforehand how much you have to enter. So you have to say like you enter 2, your stop loss is 1.5. You have $50 at 50 cents at risk, so you can only have 800 shares. Makes sense. So that will give you sizing as well, so you don't oversize or undersize anything. So let's move on. Maintaining a journal is important. That whenever this is what I didn't started with. I didn't know that why I went into the trade. Or somebody said that, and I went to the trade. I lost money. I didn't record it. Then I don't know. I didn't learn from anything from it. So the good thing is you trade as less as often, but make sure you maintain any comment that I bought G and US today. This is what happened. This is why I bought it, and this is what happened in the trade. And so you look back and reflect on it. There are other online tools that you can use to track your trades. There are Trader View, Trader Bench, Edgewonk. You can link your account, and it will give you like different analysis options that you can reflect on your trades. So trading psychology is very important. You have to be mentally stable. Uh, you are not emotionally sad or stressed out. It affects your uh, decision power, and when once it's affected, you make a wrong trade most of the time. So make sure you are feeling good. Don't push yourself in going into the trade. Even if you don't trade, you have cash. It's at 0%. It's not reducing in the money, and even though you're not earning money, you're not losing either. So if you just have cash and you don't have mental capacity to trade, or sometimes what happens is like if I have a meeting in like 10 minutes and I go in the trade, and I know during the meeting I cannot look at it, then I have to exit right before the meeting, no matter what happens. So that should not be the case. You should have ample time. Uh, you should mentally be free, before going on the trade. For swing trading, you can do it if you have done your analysis beforehand that at this price you have to enter. You just have the order and it works automatically. Day trading, you have to have some time. So there are two types of analysis. One is technical and one is fundamental. The only difference is fundamental is about company, how they are doing, and technical analysis, how their stock is doing. So there are a lot of variables in fundamental analysis. There are a lot of things to look at, but major things are total revenue, how much they are generating, how much earning they are doing according to their share size. Price to earning ratio is basically the stock price with respect to their earning. Higher the stock price means price is slight higher than what they're earning. So PE ratio normally higher when companies have huge growth projection. If majority of the people think that they're going to grow substantially, their PE ratio is much higher. But it's a common perception that lower PE ratio is basically a good time to buy in. Lower PE ratio, if a dividend stock, lower PE ratio will also give you more yield on your dividend. Like if a stock is trading at 160 and they are giving $2 per share on dividend, if it drops to 80, your dividend yield is like double now. So it's a good time to buy on dividend stocks when their prices goes down. You have to calculate how much yield you are getting, but price to earning ratio reflects it. So if you are into dividends, so when the price to earning ratio, P ratio is lower on dividend, then you can get more out of your dividends. Leverage is the amount of debt to equity, how much that they have against what they have asset wise, what product they have, future potential growth driver. So you can analyze any stock based on these factors. Competitive advantage and disadvantage. You can basically evaluate any stock based on these factors. Company management, just like Warren Buffett, he invests in management. Basically, whatever management he likes, he invests in those companies. Peer-to-peer comparison, how they are doing against their own competition, regulatory environment, pending charges. Certain companies are working against environmental concerns. Uh, they also get affected in the price. Short interest is a good indicator of a company. If a short percentage is more than 20%, means a lot of traders think that the price will go down. This will also happen to GNUS. Short interest raised substantially when it went to 11, and then price down. Hot sector mania is basically most of the stocks, they move along together, like shipping, they move together, oil move together, bitcoins move together, uh, uh, technology moves together. So if you see on Finways which sector is doing good, and you pick a stock within that sector, like technology is doing good, and you take greater on Apple, you will most likely be green because it's a support of the whole sector. So that's how you can take swings and day trades, just by looking which sector will potentially can go up. Uh, in biotechs, vaccines move together, cancer moves together. Um, it's just everything is together. So more time you spend on stocks every day, you will see, oh, these stocks are grouped, these stocks are grouped. So if you are into technology, just make sure you know different sectors in technology. Even in technology, you have cloud services, you have devices, you have IoT. So you have to know about their peer-to-peer comparisons, uh, who is doing what, their revenues, earning per share. Once you have these understanding, then you can do swings and day trades much better way. But takes a lot of time. But that's how you get succeeded as well. So these are all the fundamental analysis, and now we are heading to technical analysis. In technical analysis, I just wanted to briefly introduce how Candlesticks works. Basically, this green body is basically shows that price was entered here. If it's green, it's entered below, exit, this is the close, and these wicks represent the price went up there and then closed here. And the black or red ones basically open higher, close lower. This price went down further and came back and closed here. So if you have a big wicks, it means the price went further up as compared to the closing price or opening price. So body, in technical analysis, body wicks, they make a huge difference. Even in day trades, the candle tells you when to enter and when to sell. So we will go through it later. There's another representation of line called bar chart. This is the, if it's red, black one is basically green over here. So this is the opening price, this is the closing price. Some people like it bar chart, some like candlesticks. So they mostly represent the same thing. Highest price, lowest price, entering, close, enter, close. The one candlestick tells you buyer and buying pressure and selling pressure as well. If you see body balance between equal wicks, it means the buying pressure and selling pressure was pretty much same, but as it was green, there was the huge buying pressure, same as the selling one. But if you have a smaller body, it means different things we will cover later. So this is an example of bearish candle. You see increase in volume, and both of them are red. And it's also engulfing, is covering the whole body of the previous one. So this type of setup generally means that price will go down because of huge selling pressure. The volume increase, but price decrease. So it means most of them are sellers. So this means general sentiment of that sort, that more people are trying to sell than to buy. So price will further go down. Bullish candle is basically when you have a surge in volume, but it comes down on green to green, and it's also engulfing. It means from prior day price action, there's a huge buying pressure. So a lot of people are speculating that the price will go further up. So it will most likely go up next day. Reversal candle means when you have a decreasing pattern, and reversal will mean that it start going up. So you will have a reversal point. So bearish reversal will be the price is going up, and you have a reversal and starts going down. So engulfing candle is a pretty good candle on daily charts. If you have engulfing candle, it means strong reversal. I've seen in different examples that this happens, that you have an reversal, but doesn't happen 100% of the time. It's like 75 to 80% time it reflects what it is. If it's decreasing pattern and you have an engulfing green candle, there's a reversal taking place, same as bearish one. These are called dojis. So this is also a body, but it's a straight line. So it means buying pressure and selling pressure is basically canceling out each other. So if the overall trend is bullish and you have a doji, it means the seller are now forcing buyers to go down. So it will be a reversal and price will go down. So just think of it, there's a pressure coming. If it's going up, the pressure will force it down. So this is a good representation of that they are getting succeeded in keeping the price down. And in future days, they will most likely succeed. Then price will go up, down. Another in reversal of downtrend, you have a buying pressure, and most likely price will go up. So these are all called doji candles. If you have a doji candle and the head is like top of here, it will be like most likely inverted hammer, and it will be like huge buying pressure. And if the line is down here, it will be huge selling pressure. So the body will tell you how the market, how the trader sentiments are working, and it will help you in taking a decision what you can do next. If you're day trading and you see this is your selling point. If you're day trading, shorting something, this is your selling point. This is a clear indication that like it can go further down, but this shows that buyers are stepping in. So during day trades and swing trade, you make your analysis on a daily candle, and day trades you make your decisions on 1 minute chart or 5 minute chart. And if you have these candles here, it will tell you that how the market sentiment is going. Again, these are all speculations, and they work most of the time, but they are not 100% correct. So this is called Bearish doji, like inverted hammer type thing. And this is telling us that there's a huge selling pressure up here and the price will go down. And this is opposite, huge buying pressure, price will go up. It's called bearish and bullish doji. These are called doji candles. Doji candles are also pretty good indicators of price action. Basically, they are telling us is how the traders are uh, thinking and what their mindset, what they're doing. So these candles don't lie, price volume don't lie, these candles don't lie. Patterns are different thing, but if you see those candles in rate, this is the point you sell. Gap up and gap down candlesticks. So basically, I've seen this during intraday on 1 minute candles. That price finished here at the end of the minute, and it started back up here. It's a huge bullish sign. This is huge bearish sign. The price will further go down. These are all these indicators to help you make better decisions. These are the examples. If you see, this is basically one daily chart. So one candle is 1 day. So if you see this is a doji cross, and it was downtrend. It shows reversal. So this is will be your entry and your stop. It will be hard to justify stop here, but it will be depending on the previous support levels. And but this indicates that this will be a reversal. So this will be a good trade for reversal. And also this is also engulfing. So this body is covering the whole body of this. So this is also a very good bullish sign. So your entry would be around here if it crosses this line. Then your stop would be about below this line. So at this, if you enter here, you are not sure about your stop loss. Sorry. But if you enter here, you are sure about your stop loss. So it all depends on where you're entering and how you're perceiving your stop loss. So if I enter this day, I'm not sure where my stop loss is, because if it fell down here, I would have stopped out if my stop loss is here. But here I have clear indication that if I enter here, my stop loss would be under here. And your upside is about here. So that your entry also calculates, like when you're entering, it should dictate your stop loss. If I know here I am bullish, still bullish, right? So if I enter here, my stop loss will still be here, but my reward to risk reward ratio would be messed up, so it will not be a good trade here, but it's a very good trade here. So if something is going up, and I've seen a lot of times that if it's still good time to enter, it's a good time to enter, but your stop loss would be right here. So you are losing this much instead of this much. So that's how we calculate our entries and exit normally. This is this example. You see this this line. It's expressing huge buying up pressure. So it will be a good entry point here. Dragonfly doji trends reverses. It doesn't work all the time, but if I have to take a trade, I will take at the break of this line, and my stop loss would be right here. But but it depends on where you are entering the trade. It all depends on where your stop losses are and where your target would be. If you buy higher, your target is still there, but your stop loss is still down there. So if you are not achieving 1-to-2 ratio, then it's not a very good trade to take. This is another example of gap. News happen, gap up, gap go on for several days. So he is trying to take trade when it's coming down, and he has like new support levels. You have an engulfing candle, and you enter about here. Your stop loss would be here, and you take trade accordingly. But this is this is a good reversal. I cannot, I don't know how I see comment. If there's anything urgent, just somebody just speak up. Just let me know.
Where can we see these candlesticks on Yahoo Finance or our trading platform or what?
But what scanner?
Where can we get these candlesticks? Like, do we need to go to Yahoo Finance, or we will get this on our own trading platform like TD Ameritrade or something?
Yeah, you can get these just like this. I use Webull. This Webull, you can either select charts or you can either select lines. So if you are swing trading or day trading and you are into technical analysis, you have to have candlestick. You can use Chartmill. You can use stockchart.com, Chartmill. You can use uh, there was one website that Salman Bhai used. It was tradeview.com, I think. You can use your broker. You can use all the brokers, Ameritrade, Webull, they offer candlestick charts. So once you are into technical trading, then you have to have charts. Otherwise, line chart doesn't give you that much detail that you need to have support and resistance levels. Because this line chart will tell you price comes, this will join here and here, and you will see decrease, but it will not show you where is your resistance levels are. So that's it. So after the candlesticks, there are more stuff that you can use to point out your decisions, make better decisions. They are called indicator tools. Indicator is basically also give you a clear picture, like it has a dimension to your charts, and so you can make a better decision where to enter and where to exit. So one technical indicator basically is support and resistance, where you use charts. These are on daily, and you develop a support line and resistance line, and you take trades according to it. Basically, support and resistance basically support areas where you have more buying pressure, and area of resistance where you have more selling pressure. I'm emphasizing more on pressure because here, why it's a resistance, because there are a lot of people who bought here, right, or who bought here, but they are waiting for price to go up. So now if somebody is waiting 10-20 days and their money is stuck, they are trying to exit here, and when they're trying to exit, a lot of people will try to exit, and this will force the price to go down because there's a lot of sellers now in this area. So that's why this is a good resistance, and you just have to visualize it as how people, you have to see the past data, where the price went up, how it went down. Like it went down pretty straight down line, but if it goes up, this will act as a very strong resistance, because a lot of people who bought here will try to exit here just to break even, and that's how it works. And when they are out, the price goes down again. But if you're not in the trade here, you can have good trade here, but you cannot have here because your support level is not justified here, so you have to buy somewhere here. It's because you have a good support here. You cannot buy here, it will not be a good trade because you cannot justify your stop loss. Here you can justify your stop loss because you have a line here, and you can this price, this went down, so this could have went down as well. So this is also very complicated situation where you are not sure where your stop loss should be. But if you see like it's bouncing up from this EMA line, this can be under, stop loss can be under here, but it's very unclear here. But the idea is the area of resistance, area of support, how to think about it, because when you visualize it better, it makes much more sense while you are in swing trade, and it will give you some peace of mind that even if you're red on something, you understand better that how the price action is going on with respect to time, and it will help you in making better decisions. Again, all these things, they are not 100%, but they help you in understanding how the traders out there in the world, how they are thinking. So all these tools are doing is giving you an idea how the other traders are thinking. So you make money when you outsmart general population. So you have to know how they are thinking. So they are thinking in terms of technical indicator, they are thinking of in terms of support and resistances as well. So you have to make better decisions. You cannot enter anytime, you cannot exit anytime. You have to trade your chart. Don't trade you made $100 is not enough, or you made $1,000 is too much. Just trade according to chart. Even if you have an area of resistance here, you can exit here to be on the safe side, or here. You don't have to wait here. So what I'm saying is you have to just make an idea that this can go up here, this can go up here, but it's all just speculation though. It just helps you understand better how the market or general population is thinking about it.
Yeah, regarding that particular chart, are there any tools that draw areas of resistance or support for you, or is that something that you have to learn and draw yourself? Plus, from what I can see on this particular chart, you have two lines over here. One is the moving average for 200 days. The other one is the moving average for 50 days. Is that a general is that a general chart that you follow during your trades to analyze you know, the market or whatever stock you're dealing with?
Yeah, normally 200 moving average is a pretty good support, and it's a very good indicator, and all the traders, they take 200 MA as a good resistance or support line. So, but the thing is, you have to consider multiple things before taking a decision. Like right now, we are focusing on area of resistance and area of support. We will cover moving averages later on, but if you combine all of them together, you will have a complete clear picture. Like multiple indicators will telling you that it's bullish, and one or two is just bearish. So you can make better decisions by combining multiple things together. But this line of resistance, real resistance, I have seen in Ameritrade, they can draw the line for you. But you have to just Google it, how to draw area of resistance and area of support in Ameritrade. I have seen it in the client. They have the option for it. We will also have the option of area of resistance and area of support. I think it's in an analysis portion. So this is something that you can get learn, or you can get assistance from your broker.
Thank you.
No problem. Another support and resistance formation is your trend line. If you see, this is a trend line going upward, and here it broke the line. So basically, this is your inclined support line. So your stop loss, if you are trading up here, your stop loss would be up here under the line. Just so you know, okay, the trend line can be either upward, or here the trend line is downward. If you connect these two down here, your entry will be here at the break of 50 moving average or break of trend. So this is how I do day trade on. If you are swinging, you do it on daily. If you are day trading, you will do it in 1 minute chart or 5 minute chart. But I do just draw these lines to understand. Here you see this a huge green candle, and it just broke the trend, and it went up from here. So it basically killed the downtrend, and here under this line, this killed the uptrend. This is another example. You have good support up here, good, very high resistance up here. You can enter up here. If you enter at the break, your stop loss is right under the break. So this provides a very good reward to risk ratio. But you have to see past resistances above that to see where you are gonna exit. He's saying if you are shorting here at these points, your stop loss for shorting would be right above it, and your covering will be here. So support and resistance makes the picture a little bit clearer, but if it breaks support line, it's very bearish. If it breaks resistance line, it's very bullish normally. Most of the time when I do day trades, I do break of resistances. That's because my reward to risk ratio is higher. If I enter here, my stop loss would be here and my upside is more. But there's very less risk than reward. So breaking is good, like we normally do. I will show you at the end examples how I day trade or swing trade using the client. Let's go through all of this first. Moving averages also support, also act as resistance and support. Just want to make sure how much more time we have. Either I can go through with all of these very fast, or we can take some time and just go through slowly. I cannot see.
Ali, how much time we have? Ali, Hassan?
I think since we're at an hour and 10 minutes, you know, and just to be respectful of everyone's times, we could probably skim through the remaining slides and do a question answer. That's my thought, but I'm not sure what everyone else thinks.
Okay, I'll ask all other members. If you have any questions, keep asking Yahya the question, because I know all of you have many questions in the presentation. You may want to ask even question ahead of his. If he's missing anything and you want to ask, please go ahead so that we cover your questions in this session in the next 20-25 minutes.
How about if it's possible, we can end the presentation here and carry on next week, or I can just take 10 minutes, go through all of them and take the question and answers.
Okay, let's
Yeah.
let's do that. Complete your presentation. This presentation we will try KG. It is available to all those who registered.
Okay.
And then if somebody has a question, we will ask you to answer those questions. We can put the questions in FAQs or something. So let's wrap up your presentation.
Okay. So moving averages are pretty big supports. Either you are using daily or 1 minute chart or 5 minute chart. These moving lines are pretty good support levels. If a price is under the moving averages, then they act as a resistance, and the break of it will bring in more volume and just spikes up. So they can either be resistance or support depending on prices above it or below it. Golden cross is basically a pretty well-established terminology, and your 50 moving average is crossing 20 moving average, and it's called death cross if it's vice versa. If the 50 crosses below 20, then it's bearish. Now it's bullish. And one thing to point out, exponential moving average is more sensitive. So they move more with respect to price action. Moving average are not very sensitive. So EMA, you can either use exponential moving average or moving average. Relative strength index is basically says if the relative strength index 70, it's considered as overbought and price will go down. It's just an indicator. If it goes up 30 or below 30, it's oversold. Means a lot of people sold and it's a good buying opportunity. The convergence is very important in day trading and swing trading. It means price goes up, RSI is going down. It means it's diverging from the normal trend, so it's bullish or bearish. And if you have a divergence and the price is increasing and price is decreasing and RSI is increasing, it means it's bullish. And like there is more strength coming in, but the price is decreasing. So it will act as a very bullish pattern. This is very helpful and it works almost all the time in day trading. If I see 1 minute candle, in 1 minute candle, we have a RSI divergence. I take trade, and you at the bottom, you are at the very good stop risk to reward ratio. This is an example of Apple. You see price is going up and RSI is going down. So this is a very, very bearish pattern. So after certain days, it went down because of coronavirus anyway, but technically it was very bearish. So MACD convergence is basically is also coupled with RSI. It gives you a clear picture, even though your RSI is telling you that it's oversold. Your MACD, if it's further apart, it means it's bullish. So its overall trend is still bullish considering both of these. And here, when you have convergence, that might be your selling one good indicator that price is going down. So double bottom, double top, it's also a good indicator that price resisted here, price resisted here. It cannot go up. Mostly people are selling here. The price will go down. Double bottom means huge seller, huge buyer, huge buyer, and the price will go up. There's very strong indication of buyers. There are bull flags. You see bull flags when the price is constantly going up in one direction. The bull flags, it gives you a clear indication where to put stops and where to enter. You can enter out here, have stops here. These gives you better idea where to put stop losses and where to enter, where to exit. So just keep those in mind and just research more about these. You will have more information. Double top, just an example, double top, you have decreasing bull flags. Price is still increasing, even though the moving average is still trading above moving average. Bull pendant is very important in day trading. When you see this, either price will go down or up, so your entry would be around here, not here. From here, price can go down or price can go up. So your entry should be here, and you will have a decent profit. Now, trading pendants, you have to see where the price is going. If you are shorting, your short entry would be here, and you can cover where your support levels are. But this triangle can be either going up or down. Your entry can be here, or entry can be here for short, entry can be here for long. ABCD pattern is pretty straightforward. It's not widely used, but it's a general indicator that this is known as a pattern, and you can have some entry here for short and just cover up here. Head and shoulder is also very important. You have a head and shoulders are below your head. So head and shoulder is more normally is bearish, and inverted head and shoulder is basically bullish. You have to see these levels are almost same to make it work. Other patterns are cup and handle. You can enter up here on the candle and have your stop loss under this line. Triangles, basically symmetrical triangle, ascending triangle, and descending triangle. These are all patterns that you should remember. There's also a breakout pattern that's you see one top, double top, and if it breaks up here, you have a huge upside potential, and you will, if you are seeing the volume, you will have a surge of volume up here as well. If it breaks, it's a very good pattern for day trader. Learn as many patterns as you can, because it will give you a general idea how the market is going to react in near future. Once you do all that, you can make arts like these to better predict your prices. So these are the guiding principles of swing trading. Just keep it simple, keep a journal and take it seriously. Make sure you are mentally and physically active. manage your risk reward ratio, and just focus on 1 to 2 or more than 1 to 2. Measure your results, your accuracy, how many times you're right, how many times you're wrong. Just find good few stocks and trade within them, or you can find good stocks in certain sectors that you like and just trade in them. So these are the things that I look forward when I'm into swing trade: earnings report, public offering, downgrades, SEC investigations. One thing I want to show you guys is how to look for SEC filing. So basically, there is a 10K form that you can find in Nasdaq.com, or you can find in your brokerage account. You can type any ticker and you can find their 10K form. 10K form is yearly financial form. You can search for revenue and see how many short-term debt they have. They also have to find out how many cash they have on hand. You can search, Control F, the search on that PDF file, operating expenses, and you see how much they are spending on operation per year and how much cash they have. If they have cash for 5 years of their operating expenses, mean they might not do offering. If they have less operating expenses and they have, if they have more operating expenses and less cash, then they're likely to do offering. You also can see if cash equivalents, how much cash they have in a hand, like in terms of convertible notes. Or you can search for terms, offering, warrants, or convertible notes in the 10K file to find more about the company. Any company you like Apple, you can find all that information in their 10K form, and it will give you a general idea about the company, where they're standing cash-wise, operation-wise, revenue-wise, and you can better understand how the price is gonna move forward. S3 form is important because they can file S3 form and they can tell you that they can offer 1 or 2 million shares in next 2 years anytime. If they don't have shelf, then you are good to go. You can swing trade with peace of mind. Or if you think they're gonna offer, you can wait for the offering and then enter at that point. So this is the scanners that I use mostly in the Webull. Pre-market scanner for ideal for trading opportunities is basically a top gainer and extended hour ranking. It just tells me what's going on. So I click on each of them and see how much volume they have. The bigger the volume, lower the float, I prefer those stocks. Finways, look at Finways for these factors, advancing. When you open Finways, you can see which ones are moving up, which ones are moving down. You can see which ones are moving at 50-day or 20-day SMA. So it will give you a better idea what you can swing and what you cannot. You can also see stocks within the market, like business support supplies. These companies are doing well, and this business supplies are doing much better than the other during that day. So these market analysis will give you a better idea what you can swing and what you can day trade. These are the scanners that are widely used by the traders. Trade idea is $150 per month, but it gives you much better earlier where the volume is coming in early on, and it will give you a very good idea where the momentum is building. Webull also has screening options. Meditate also has screening option, and there's another one, TC2000 is also paid, which is pretty good. So trade ideas is very good. You can use Webull, you can use a Meditate, and you can set up your own scanners. So if you have to set up a scanner, you can set up according to volume, price, country. Relative volume is the one I use. Like if relative volume is 1.5, it means I am looking for stocks that have unusual activity. You can also set up your scanners on technical tab. Like if 50 moving average is crossing 200 moving average, you can see those stocks that are moving above 200 SMA line. You can set up RSI range. You can have too much flexibility in setting the stocks. It's just your preference what you want to trade. You can also select which market sector of stocks you want to see. You can see technology stocks within those parameters, and it will tell you those stocks And you basically just to find stocks, which stocks you are interested in trading. So these are just different strategies for swing trades, gap ups and downs. One thing is hot sector. Sector moves together. We had hot sector, gold rush, dot-com bubble, marijuana, mania, Bitcoin. They moved pretty well together. And the way you want to find out is through social media or through news channel or through your public dealings. Entry and exit during swing traders is very important. Your entry dictates where your stop loss is and where your target is. Just keep your losses, think of it as overhead charges. This is a business for you. Don't take losses as losses, just take as business expenses. You just have to minimize those. You will have losses, you will have any business you do, you will have expenses. You cannot run any business without any expense. So take your losses as expenses and just try to keep it as low as possible by entry and exit strategies. This is very important. Reading level 2, basically this is level 2 and it shows you at 2.5 there's a 12,000 share order. So you know this is a decent resistance. So you can sell here. This is basically another type of support and resistance in tabular form. This is the same version of level 2 in Ameritrade. The one is basically 100. They just 100 shows as a number as 100. This is basically ladder. It shows you at this price point there's 8,900 share order, and you can click and bid share and ask one, and you can trade from here as well. Normally when I day trade, I have these button customized. I buy at the ask and I sell at the best bid during the trade.
Yeah, quick question. You're talking about 1-to-2 ratio. Can you please explain on it a bit more?
Okay, so if you see this slide, you have a Doji candle that tells you that there's a reversal, right? If you enter here, your stop loss would be around here, right? So let's see, this is 44 and this is 42. So you are entering at 44, your stop loss should be 42, let's say. So if you are entering it, make sure your target is, you are losing $2, you should have $4 as a reward. So you're 44 and 48. You see this resistance is 48, there's another resistance here. If you think that you are enter here and exit here or here, then it's a good decision to do a trade here. If there's a resistance up here and you enter here, there's a $2 reward and $2 risk. So now it becomes 1-to-1, which is not a good trade. So before going into any trade, evaluate your risk to reward. If you think you can enter here and you can exit here at 50, then your reward to risk is 1:3 because you're risking $2 to get $6 if you exit here. So make sure you are getting into those setups that are providing you better risk to reward ratio. And if you think about it, if you are getting all the trades with 1-to-2 risk ratio, right? With 50% time, you're right, you will end up breaking even. And this is achievable. If you look for trades for 1-to-3, you have to be right 33% of the time to be break even, which is very highly achievable. So we have to wait for the setups which provide those opportunities to us. That's why it's important.
Can you elaborate just a little bit, because this answer depends a lot on how you figure out the PT. So in this case, you use the example of the resistance as the PT. Is that going to be always the case? How do you determine the PT?
Yes. Your resistance levels are your price target basically. So if once you develop your support and resistances, then you can evaluate your reward to risk ratio.
Okay.
So concept of support and resistance is important. Concept of Indicators, tools are important because it will give you an idea where the price can be after a certain number of time, or where it can fall after a number of time. So you have to have both numbers before you hit the buy button. So there are numerous sell order types. I just wanted to go through it because I have asked numerous times how do you set up stop order. This is terminology that's used in Ameritrade. So basically sell limit is at this point you will sell. Sell market is whatever the price of the market you will sell it. Sell stop market is basically you will say, oh, if price reaches 5, make the order as a market sell order. So 5 will sell around 5. Sell stop limit, basically you will specify a stop price of 5. You will say if it reaches 5, sell at 6. So you will specify 2 numbers up here. Trailing stop percentage is if your price is at 10 and you say trailing stop percentage should be 10%, then if the price goes 9, it will stop you out, like at 10%. Basically, this is a stop loss. Trailing stop dollar is if your price is 10, you will type $1 trailing stop. So at 9, you will be stopped out. So these things are important to understand. Sometimes you have a bullish trend constant in which you can put trailing stops. The stop will move along with the price. If the price goes 11, your stop will become 10. If price goes 12, your stop will become 11 automatically. So this is the advantage of trailing stops. Your sell stop limit and sell stop market depends on where you have your stop loss, and sell limit and sell market is where you have your price target. You can also do a bracket order in which you specify this along with stop. So bracket order, you can specify both of them as listed here. This is also advanced orders, like one cancel other. If you have a stop order you have a price target and you have stop loss. So if your price target hits, it will cancel the stop order. So you can specify it with one cancel other, or you can specify it with a bracket order. One triggers another is basically if you buy something at $5 and if one triggers, it will trigger another one, and another one you can either put a stop loss or either put a price target. One triggers 2, you can make a bracket order to buy at 5, sell at 4, and sell at 6. So one triggers 2 can also become a bracket order. One triggers OCA, if you buy something here, you can trigger either this or this in these ones. So these ones I use normally bracket order to specify my stop loss and price target. So whoever hit first, it will be executed. So this is important. One cancel another is also important. It depends on the situation you are in. This is how you select in a Ameritrade if you are putting an advanced order. So I just wanted to show you a day trade example. I know it's taking a lot of time, but it couldn't go any faster. So this is let's see what happened in the market on Friday. Like we have SHL, CBLI, they were top gainers during the day. Extended hour aftermarket, these are the tickers who went up. We can say like say VXRT. VXRT went up quite a bit on Friday. So basically how I do day trade is basically this is during the pre-market. So we say this is the line, this is the maximum it went pre-market. This is another level of support. So when market opens, normally what day traders do, they enter at the break of high of pre-market, which is a very good sign, and they go for these small 10, 20, 30% gains. So this will be our breakout, resistance breakout. This is a resistance level, and this is a breakout pattern. So that might be a good chance to enter, and this will be your stop loss. So if you are a pattern day trader, you can exit multiple times. Like you enter here, exit, 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 and here you can stop out, but you will still be positive, and you can enter again before it breaks again. You can enter again. Your stop loss would be here, and that's how you do day trade. For swing traders, I just what I wanted to tell you guys is look at the volume. Like here you see increase in volume. So see there's an increase in relative volume. So the 20 moving average and the moving average is right now is 5. We can say 200. You can say 50. Let's see what these numbers show us. See here we have a golden cross. Our 200 moving average is crossing 50 moving average. So here you can take a trade. If you are swinging this, you have to specify past resistances, and this is the resistance level, this is resistance level, and this is resistance level. You can trade according to it. This went up because of news. They had a vaccine news. So if you have to do a trade here, this is your resistance, then you can enter up here at the break. So that's why I like breakout patterns, because they are more accurate. Sometimes in fake market, you have fake breakout as well, but the good thing about it is your stop loss is right under this support, under this resistance. So your support, this stop loss is right under it. So very good reward to risk ratio. There are other patterns as well which you can search, which I have specified here, that can also act as a good percentage for you as a winning trade. You just have to log your journal, make sure you find your pattern, find your stocks. With time, you have your own stocks that are very different from other ones which are green for you, and just stick to those. Make your strategies better, work on your risk to reward ratio, and eventually you will come out successful. Just think about it as you are starting a business and you're not expecting any profit for 2 years, and you just have to make sure you're minimizing your like expenses, business expenses. So your stop losses are minimum, and if you keep working on minimizing your losses, you will end up being a successful trader. This is the, I think, the end of presentation. I know we took about 1 hour 45 minutes. We just above the schedule time. So if you guys have any questions, feel free to ask.
Hey, Yahya. I have seen a lot in Merrill Edge and Ameritrade that both of them have quite a lot of difference in the price. Means the price at which the market is moving for a particular ticker, there's a huge difference in that. Why is that so?
Price difference in what price difference? I didn't quite get it. Sorry.
So say for example, the price for Tesla is at 900 in 919 Ameritrade. It is say 995 in Merrill Edge. So what's that due to?
That may be because of the real-time quotes. So certain broker, they are delayed 15 minutes. Certain ones are not. So you have to sign some documentation, like Ameritrade. You have to sign some documentation that you're not part of any institutional organization, or you are not managing other people. And when you sign off the document, they can enable your real-time quotes. So it just depends. It's just delayed quotes versus real-time quotes.
Thank you.
Hey, Yahya, this is Ali. I have a quick question about averaging down versus taking the loss. So how do you make that decision? You know, sometimes we have a certain price going down, and it's better to average down versus like how do you make those decisions, especially when you want to keep the your overall business loss at minimum? How do you make that decision?
So during day trades, I normally use stop loss because I have to exit during the day. In swing swing trading, you have to know your company, what you are dealing with. Like VBIV, we know they have a good product. They have to come out eventually. So at that in that ticker, I will average down. Um, so so you have to know what's the company is doing, what they are working on, and then you have peace of mind of averaging down. Otherwise you will have a strategy of stop loss. Like if you don't like the company, don't like the management, and if you want to trade, you will have a stop loss type stop loss that if it goes down you will have minimal loss. But uh, companies that you like, you think they have potential, just like Tesla, even if they go down, you are long on it, you will still buy at lower price because you know it's gonna reach 15,000, 10, 20,000, whatever your target is. So it all depends on the company, management, financial numbers, uh, stuff like that. And if you do your research, you will be at peace at average now because you know it might go up.
All right, thank you.
Any other questions?
Yeah, how can we check the short interest in a stock?
So short interest is basically you can use, I think Yahoo tells you short interest. Um, um, Ameritrade, I don't know if Ameritrade tells you, but I think Yahoo tells you short interest. Let me see. Or they're like I think Yahoo tells you short interest. Okay. I think
Meanwhile, anybody else have a question? We have last 5 minutes, maybe 4. Please introduce yourself, tell your name first, and then ask questions. So we are recording, we know who asked the question. And we will try to give you a recording of this presentation as we will see if it is possible to share these slides after we talk to Yahya and ensure there is nothing proprietary in these slides. We may share these slides as well.
Hey, yeah, this is Talha here. So I have a question. This is regarding, screenings. And so you've mentioned stock tweets here, but let's say if you follow ticker symbols, there's a lot of manipulation going on stock tweets also because people are trying to pump up something or bring it down. And similarly, there are discourse service. What and tools you said about ideas. What set of tools you think and what set of people do you know that are reliable and probably can be used and we should start following them to get good news or, ticker symbols in every morning, something like that?
yeah, there are like certain people that I follow. Like I am in PAVM, and there are like certain people who are regularly on PAVM, and it's not very crowded stock. So there are certain people who do like provide more information, whatever research they do, and they provide information. You can follow them. It depends on what stocks you are interested in. You have to find those people. You can also use Twitter to find people, but again, it's on your strategy, what you want to do, and what kind. And you have to find those people through your research. I am more into biotech, so mostly people I follow, they are into biotechs. And Twitter also, I have mostly people in biotechs, except few of them that are just telling us what general markets are doing. I can share a list of people who I follow. I've shared it before, but I will share it again. Um, but again, if you are, I don't trade Apple or Amazon. If you trade Apple, Amazon, you have to find those people who are doing. You can also use TraderView or TradeView.com. That's like Salman Bhai use, and you can follow people over there. They're also helpful. You can use Twitter. Um, it's hard to find people, but once you find your strategy and find your stocks, you will find those people.
Okay.
Finvest tells you much detail about short interest, but I've seen multiple sources quoting multiple short interest on any ticker. Even if you click on CBLI, it will tell you short interest here. This is a lot of information. Short float is 20%. Short shares float is 5.58 million, and outstanding shares are 11.35 million. This shares float, not short float, sorry. So short float is basically 20%. So CBLI is not heavily shorted as compared to, like, well, let's see, GNUS. GNUS shorts float, you see it's went up 33%. So when it went up 11%, its short float increased quite a lot. So 20% above is considered as heavy short float. But if it starts going up, you will see a massive gain again, because those shorts will try to cover. So there's both upside and downside to it. So just have to be on the right side of the trade. If you see this breaking about this line, this is where you can enter and have a short squeeze.
Okay, thanks, Yahya.
Okay, so this is Ali again. As Yahya mentioned, we're kind of over time, and I want to be respectful to everyone who joined today. Thank you very much, Yahya, for putting the slide deck together and for the great presentation. I found it to be very helpful. I think looking at the comments, others found it to be helpful as well. Of course, I hope all of us are part of the WhatsApp investments group that we have. So if you have any questions for the larger group or for Yahya, you can pose them there. Yahya is, of course, very generous in terms of giving advice and giving us his time. So again, thank you very much. And with that, we'll wrap up. Like I mentioned in the chat, we will have the recording shared with you via email. So in a couple of days, please do check your email, and you'll see something come in from us with a link to the recording, and we'll send it to the email that you used to register for the event on Eventbrite. And other than that, thank you very much, and we'll wrap things up now. Any parting comments from Ehsan or Sir Taimur?
I just want to thank Yahya. He took his time and he has explained us, give us such a wonderful tutorial. I didn't know all these terms. I used to hear, but because of shortage of time and things, I think so. This was 2 hours well spent. I learned a lot. Thank you very much, Yahya, for this.
I am like I'm happy I'm able to help you guys, because I learned a lot of stuff that I wasn't doing right, and now I realize that this is the stuff that I should be doing. I didn't have any journal. I made a lot of mistakes. I did not utilize my stop loss during my day trades, and still I'm struggling for break even because of the mistakes I made. So helping others is also an opportunity. I think I am blessed that I have you guys that I can learn from. So helping others is also helping me being a better trader. So I think I will give myself another 2 years just to learn more, and I'm not worrying about profit and losses. Just take it as a business, and I was hoping that after 5 to 6 years I will be independent of what I'm doing day to day, and I can be a successful trader. But give yourself some time. Don't worry about stop losses, profit. Don't worry about how much you are making right now. There is no quick get rich strategy. It's all about consistency. It's boring. It's not exciting. You have to be consistent to be profitable trader. If you make 100% trade one day and you lose 20% other, you might lose all of it, whatever you gain. So you have to make your rules and regulations, and you have to stick to it. And that's not easy. It just takes time.
Thank you very much. Thank you. That was great advice. And with that, we'll wrap up. Thank you everyone for joining. And of course, any future webinars or events that we schedule, you'll hear about those as well. So thanks again, and have a good rest of your Sunday.
All right. Thank you guys. Have a good day.